Today, we're decoding the math behind one of life's biggest purchases, a home loan. You see, it's way more than just the monthly payment. Lenders have their own language of numbers. We're going to break it down into 4 core concepts, the pillars that hold up every loan. Okay, let's dive into this, starting with the first pillar, loan to value, or LTV. This percentage just shows how much you're borrowing compared to what the property is actually worth.
Now, what's really cool is how this one idea can solve 3 different problems.
Okay, but here's a super important detail that trips a lot of people up. Pay close attention. So, if the appraisal is lower than the sales price, your loan amount is based on that lower number. All right, let's move on to pillar 2 and see how this all connects, the costs. All basic mortgage interest calcs start right here. Think of this as the engine of your loan's cost. So for a $300,000 loan at 5%, that's $15,000 in interest in the first-year loan. And that breaks down to $1,250 in interest for just that first month. And this perfectly illustrates why you pay interest at closing. You're paying in arrears for past usage. But hey, interest isn't the only cost. Let's talk about the fees you pay just to get the loan. You'll find these in Section A of your loan estimate. They cover the lender's work creating your loan. Okay, this is a huge point of confusion. Both are called points, but they have totally different jobs. One is a fee for their service. The other is you paying interest up front for a better rate. Okay, now for our third pillar, the long-term view of how you pay it all back. Amortization is basically the roadmap for your loan payoff. Your P&I payment stays the same each month. But look at this, what's inside that payment changes like crazy. At first, it's almost all interest. So here's a key strategy. You can pay discount points to lower that interest from day one. See, lenders use points to increase their profit, or yield. This calculation shows exactly how many they need. Phew, we've covered a lot of math. So what does it all mean for you? It means this isn't some secret code. You now have the tools to be a smarter borrower. The final question is really for you to answer. What will you prioritize when choosing a mortgage?